I could hear Waldo in the background. He said he lost internet connection. So I want you to think about really treating this as a business. A lot of times, you know, we do a startup and we have a personal checking account. We don't always start that business checking account right away, but really think about this business unit as its own entity. It's a tangible thing. And so we want to minimize what we're doing with regards to the business and the personal finances. And there's lots of ways that you can enter, you know, personal information in QuickBooks, but then show it as just that. So if you're running some charges or some expenses through personal accounts, there's a way to capture that in your accounting software. And again, it's really as much about having a process. I don't care what it is. You have to have a routine in place as it is about having that tool in place, because you can have a really awesome software program, but if you don't get in there and have a process that parallels what it can do for you, then it's really, there's no point to having that. So I always encourage folks to have an accountant on your team, somebody you can bounce ideas off. I always, if I'm doing a tax form, I usually send it off to an accountant to review it, because I'm not going to be completely technology savvy on the software. I'm going to know a lot about it. I'm going to be able to, you know, accomplish a lot of different tasks, but there's going to be times when I might want to reach out and have somebody else review the work. I think that's really important, is that you know, there are other eyes that get to look at what you're doing. So what we're going to do today is we're going to talk about some of the questions we typically see from our customers, and I'm going to be bouncing between the PowerPoint presentation, showing you a question, and then we're going to dive into a QuickBooks sample file, and I'm going to show you how to accomplish that particular procedure that we may be identifying. So a lot of people are really uncertain about recognizing incomes, and if you're recording deposits, sometimes that's how I'm going to be recognizing my income. But can I, at a very basic level, use my checking account to record all of my transactions? Is that possible, just to have one account, have it flowing through there? And do I have to create a sales receipt? So let's go to the QuickBooks file, and I'm going to show you a really simple little company that we set up here. It could be any type of company. This particular one may have consulting income. I could set and payroll as income sources, but everything I do in this company is going to run through pretty much my checking account. And when I have payments going out, I'm writing paychecks. I know that's, but I may be actually putting money for me personally, where I'm going to attribute a $26 deposit here, and I'm going to have a thing called shareholder loan. I am putting in money into the business. Up here, you see that one of the very first entries, I want to go, everything I'm doing for this business is running through my checking account. And I'm showing if I have money into other accounts, it shows up a transfer. But here is where I made a payment that I get recorded, and it gets recorded as a loan. So I made a payment out of this account to pay myself back for. You see that up in my account. So back to the question, I have to create a sales receipt for income. So here's an example of where I let's see. Here's a choice that I have to make a sales receipt. Sales receipts are really nice. It's one way to record income, and a lot of people say, well, what's this thing about undeposited funds? What's that? And I'll talk a little bit more about that. But let's say that I have a main customer and they're going to pay me with credit cards. I'm going to go ahead and create a sales receipt, and I'm going to be able to tell that sales receipt that I want it to just deposit directly into my checking account. When I put an item in this sales receipt, if I'm helping somebody do this type of work, it's going to categorize that sale. It's going to recognize that sale as occurring right then. And it's going to deposit that sale directly into my checking account. So that's really awesome. If I were to do it as a sales receipt or a sales invoice, this is where I haven't gotten the money yet, but same thing. I'm going to go to that main customer. I'm going to create an invoice. I'm going to identify the item that I'm doing it for. And I send that invoice to them. And I can email that invoice to that customer too. Really awesome up here. But if I don't want to mess around with sales receipts and I don't really want to play with invoices, I could actually just go into my deposit screen. I'm still working in my checking account. And let's say that I was awarded some type of grant. I can go ahead and set up this new income account, record that income right then with my fingers working. I don't know that it's really going to be. It's going to ask me, okay, what are you doing here? And I'm going to say, well, this is going to be an income account, and it's always looking for income things to be credits. And in this case, I'm depositing it into my bank account. And I might say it's a quick add as a customer, okay. Record, and I've just created, I want to change the date of this so you can see that it's showing up in. I just recorded that as a deposit, and at the same time I recorded it as income, just with one simple transaction. So when we think about having invoices that we're sending out, QuickBooks decides that you need to have an account, and they all set up this way, and you have an account called undeposited funds. So what are undeposited funds? Undeposited funds just represent a bank account. When you get a payment from a customer, QuickBooks says, oh, okay, you want to put it, we're going to put it into basically cash on hand, and then from undeposited funds, you move it into your checking account. So if you got a bunch of payments from customers over the course of a week, you know, you could go ahead and put them into the undeposited funds, and then at the end of the week, you could move one deposit into your checking account. So what happens if I've recorded that? I got to make sure I stay on track of my questions here. So we can open the checking account. We can keep track of all of our transactions there. We don't have to do it as a sales receipt. We don't have to do it as an invoice. It just depends on who we're creating these transactions for. We could do it when we make a deposit. We could actually categorize that deposit to more than one account. So we go back to that little $1,000 deposit that we got right here, and this is called splitting, which is really awesome. So I can tell that I had some of it come from, I'm doing one deposit now, but I had it come from multiple sources. And I think the splitting functionality is really awesome. I can't see that number because of my little pop-down menu. But now I've just changed my profit loss statement to reflect the different types of income. I could even record sales as adjusting journal entry. So I go into company, and let's say that I think I might have saved a few others in 2015 that were, well, we'll just do a new one. So let's say I receive a payment, and I'm going to have a new income category called product sales, and I'm going to set it up. I'm going to create income. I'm going to close it, and I'm going to show the product sales as, and then I'm going to tell it what account to put it into. all through adjusting journal entries. I think these are really a great way to, kind of talk to inform your reports, because you can go in and you could change it, you could split it into multiple things. I could add, if I had collected sales tax on this, I could have said, okay, it's really, the product sales were $2,000, but I actually deposited $2,120 because I have some sales tax payable. And I can just go in and just show it as other current liability. And boom, I've recorded the sales, I recorded the sales tax that I have to pay, and I've also shown the deposit into my checking. So this is one way, as we're working through income and recording deposit. The thing that I really caution people, sometimes they recognize the income when they write the invoice, and then they make a deposit and they recognize the income from the deposit, and that's, we don't want to do that. We don't want to double count that income. So if you send out an invoice, it's recognizing the income, then you have to wait and record the payment and then make the deposit through the regular process that QuickBooks allows you to do it on. So yes, we could do it as a sales receipt. Yes, we could do it as part of the deposit. Yes, we could do it as an invoice. Yes, we can categorize the deposits into more than one account. We could categorize them into more than one category. And then we could do it as a general journal entry. All options for us. So now let's think about, I've moved beyond the credit and I'm into my daily operations, and I'm just super confused about how to enter my credit card payments. So some of them I'm paying personally, and some of them are, are business-related charges that I'm paying personally, and some of them are business-related charges that the business is going to pay. There's a lot of different ways that I could record this. What if I have interest charges on my credit card? Can I record that? And what if I'm, using personal cash to pay for expenses? How do I record that? And again, we want to come back to splitting those purchases into a lot of different expenses. So let's talk about expenses. There's different ways to be recording expenses. If we want to, we just write the check, and we're going to decide that on, we're going to go back to the 15th, we're going to write a check, we're going to write a check to, don't ask me why I'm doing PayPal, but for shipping and handling. Let me get postage. Okay, and I've just paid that bill. If I had gotten an invoice and I just write the check, I pay the bill, I categorize that, or if I were paying PayPal and there was more than one type of transaction, maybe part of it was shipping and part of it was fees, I could split that within that check. I need to get rid of my little, okay, there we go. I can split that, and that was like a 9-1 thing. Right here, again, I have the opportunity to go down here and split the detail out, and it automatically knows we're going to do that differently. Oh, let's see what we want to put on there. We want to have, all right, so hopefully you understand this process of splitting, because I think it's a really powerful tool for you. As you enter one thing, we can go back and change those things. We can always go back and change those things. But this box right here tells me that I know that this check was written for $50 and it's split into multiple categories. So when I go in and look at my profit and loss for that time period, it's going to show me all of these transactions. Let's go down to the postage and delivery. So So here's the, and I can click on it. I love clicking on it and just diving into the detail that I want to look at. And it's showing, here's that $25. Even though I paid $50 to PayPal, only $25 of it is showing up here. So the detail is breaking down, and then here's the other thing that I put in there for PayPal. So it's really good to think about the expense categories that you're creating. We're going to talk a little bit more about that after we get through the credit and daily operations. So we can split a purchase into different expenses. So what if I do use personal cash and I go in and I have, let's see if I have a credit card set up. I have a credit card set up here, and I'm making these payments. And this is where I actually made the payment, and then out of this account, and then I moved it into the checking. So here's where I wrote an American Express, and then I actually entered the fees after that, because I always want my checking or my credit card account to be at zero. I always want it to be a wash. So I enter in what the charges were, and then I enter in the payment. So let's say that this payment right here was really for $500. And I can go in and change it right away. It doesn't like me doing that because I reconciled it. And let's say that part of that was because I charged the $135.46, and it was something personal. But the business paid the $500. Of which 364 of it was for professional development, and 135 of it was the charge that I put on it personally. And the way that I usually do that is then I run it through like a shareholder loan, or you might have something called a member draw if you're a single owner LLC, or if you're a sole proprietor. You just want to keep track of that as a draw. It doesn't show up on the P&L. You know, the cash comes out of the business, but the actual transaction is not getting expensed by the business. So it's going to be right here. Here's one called owner's draws, where you're doing, you know, you're contributing, taking for personal uses. This is where you're going to want to keep track of that. So let's make sure that we talked about these. How do I recognize interest charges on my credit card? If we are working, I really recommend that you set up a credit card and you record all your charges, even if some of them are personal, or you just record the charges that are business and just pay the portion that's business. So if I had this balance and I didn't pay it off, and then the next month I incur interest, I could go ahead and show this as an interest expense. And now I have an $8 balance. Let me just see this one. If we only paid $150. So we still have a balance, and part of that balance is going to include interest. And I always know what happens when I'm recording those credit card expenses is I'm categorizing them to insurance or travel or whatever it is, and I always know what the balance of my credit card is that's attributed to the business part of my activities. Again, we can split those purchases into different expenses. Some folks ask about where the depreciation and the amortization expense comes from when you look at your profit and loss. And that's really attributed to you buying furniture, equipment, or having intellectual property. So if I were to like buy a $1,000 computer, I don't think it's going to like that version. I've created a fixed asset. I'm going to do that differently. I'm going to buy it, and it's going to come out of my checking account. And now I've just put that asset on my balance sheet. But at the end of the year, I have the opportunity to expense it. And what I do then is I'm going to take it out of the assets, and I'm going to have a category called depreciation expense. And I'm going to do that for the end of. So I buy it, I put it on my books, and sometimes we create a category called accumulated depreciation. It would look a lot, it's attached to my fixed asset account. It's just a contra asset account. So my total assets and furniture might be a couple $1,000. My accumulated depreciation might be a couple $1,000, and it's going to wash out to zero. So that's how we deal with depreciation amortization. I want you to think about a really awesome tool called classes. So when we look at a profit and loss statement, we're looking at let me go back to that window. Somehow I closed it. Okay. These all are important categories. I mean, these are all categories that you might want to simplify, but you know, you want to be able to look at your P&L and look at expense and have really important relatable categories. Now, if I have consulting income from different sources, let's say that, okay, now I'm selling products and I'm also doing consulting and I'm also doing grant income. I still have all these expense categories, but I don't want to create an expense category for every one of those. I don't want to have a, let's see what would be a good example. I don't want to have my office supplies showing up 3 times so that I have office supplies for my retail product sales and I have for my grant income. I really want to be able to create another dimension to this profit and loss that I could look at by what's called a class. And classes are a really awesome way to be able to look at your data. So you have to tell QuickBooks that you want to be working with classes, and the way that you're going to do that is you're going to go into your accounting. So I went up to edit, I went to preferences, I'm going to talk about accounting for the company, and I'm going to use class tracking for my transactions. And what it's done is now it's allowed me, this didn't appear before, this class list. And so if I want to create some transactions that have, let's say like I have retail, and then I'm going to create one called, I'm going to do another one called grant work. So now I have 2 classes. And what happens then when I enter, like I'm paying my contractor, I can go up here to this and I can identify this work right here by a class. So let's say that, okay, so I received, and this is an example of showing the income when I make a deposit. So I do $12,000 that I had income on contract number 3, and I paid out $8,000 to other people that helped me with that. And I'm going to make part of that retail, and I'm going to move part of that $12,000 into savings, and I'm going to do another part of that. I mean, I'm going to expense out my contracted services to folks that were doing this type of work. And it's really created an awesome layer of detail to this. So right now I only see my profit and loss by one class. Now I have to go through when you're working in this fashion and you do commit to working with classes, you do have to go through and categorize all of your stuff as classes. If it really makes sense for you, I mean, if you have a consulting arm and you have product sales and you have customer service, if you have very distinct income sources that have very distinct expenses, but the expenses, kind of go across all the categories, I would encourage you to look at the possibility of introducing classes to your reporting. We use classes at the Women's Business Center because a lot of our grant income we have to categorize to class, and all the employee, the payroll piece of it is also getting attributed to class. So you can look at lots of columns that break it down by the different things. So I can pull up profit and loss for each one of my business units. And in this case, for the Women's Business Centers, it would be for each one of our grants. So that's something I think is really an awesome tool, and you can see how it factors into some of your traditional financial statement. So, people are really kind of, we always have to be entering to create any kind of meaningful report. And what are the most important reports to review? Well, I think that this depends on who you need to be sharing that information with. So if if you're working with a banker and a loan requires it, it might just be an annual report. It might just be your tax return, but typically they're going to ask for an annual report in addition to the tax return, just to see how the business did. Do I have to print every single report? This can get to be really annoying. The really cool thing with QuickBooks is up here, any file, any report I create, I can go in and save it as a PDF. So right away I would have the opportunity just to save it electronically. I also have the opportunity to export it into Excel, which I think can be a really awesome tool if you want to kind of look at it over the long term. So let's say that we wanted to look at this for 2 years, and I don't want to sort it by class anymore. I want to sort it by quarter. So this can tell me, I can look at it, I have a little bit more of a longitudinal viewpoint where I can see, wow, maybe some quarters are a little more active than others. And I could just go ahead and say, well, I'm going to just, first of all, another thing I could do is just collapse it. So now I can see all these quarters in one area, and I can go ahead and export it into Excel. And I could, one thing that we started looking at in our organization, I'm just going to create a new workbook, and it's going to open a new file. It's going to have all the headers. It's going to have everything that I want. So I could actually save this in Excel, or again, you saw there's right there getting imported. And there's a way you can turn it off when you do the export so that you don't have this right here. When I'm looking in the Excel, I have all these extra columns, which I don't like if I'm trying to do graphs. And there's a way you can turn that off when you go in and do your creating the worksheet. So I think it's right here, give it space between the columns. And then it usually remembers that. Okay, so that's about classes, and that's kind of about long-term. And at the very least, I want you to be printing a P&L by the month. And then as each month goes by, maybe doing a year-to-date comparison of this quarter to last quarter so that you can kind of blend a little bit of the seasonality. Or you're at least looking at year-to-date today versus year-to-date last year. And, that does require that you're in there and you're doing it and you're putting all this data in because I really believe that you are the best person to be doing this. Yes, you can use the tools, and yes, you can delegate some of the data entry, but you've got to be keeping track of that progress, and you've got to be looking at that information because it's going to be giving you some really awesome feedback about what's going on in your business and what you might need to change. Let me look at my little I think that I'm going to give you a little checklist here. I think that you should understand how to split a transaction. So if you don't know how to do that, we can get on the phone someday and I can, walk you through that process. I think that you should be able to understand adjusting journal entries because usually your accountant will give them to you at the end of the year, and it's a really helpful tool to go in and enter information into this file so that you look at your tax return for 2015 or 2016, and your QuickBooks report is identical to that. It won't be identical because of adjustments like the meals, but it is going to be identical typically for your balance sheet, and you can look at it and know that it needs to be adjusted for meals. So we want to look at adjusting journal entries. I think if you are doing payments, personal payments out of the organization to you, or if you're adding cash, you need to know how to keep track of the owner's draws and the owner's contributions. If I went in and made a credit card payment on behalf of the business, I want to show that. I want to show that the credit card balance went to zero, but it was based on me contributing. It was based on my contribution financially. So I think it's important that I know how to be able to do all of these things in my accounting software. And I think we can open it up for questions, Waldo, if you've had any come in over I wanted to leave enough time for people to be asking. Yes, it does take time.
We didn't have any questions come in written, but I am going to open up the microphones. I would ask that you click on the raised hand. If you're in the webinar menu, the attendees list, if you click on the box that says raised hand, I can call on you then to ask your questions so we don't have people talking over each other. But everybody's microphones are now open if you have any questions. Any questions for Kim?
Hey, Waldo, I have a question for you.
Right.
So, what you do in terms of the micro-lending and looking at financial statements, are most of your customers presenting that information as a financial statement, or where do you see kind of a gap in what they're giving you versus what you need to be able to look at?
Most of the financial statements that I see with microloan applications come in on the application form. There is a asset liability listing, but typically the assets and the liabilities don't balance out. Someone will put on that they have maybe $20,000 in business assets on the asset side, but then they'll have 3 business loans on the liability side. So I don't know if the asset side is the value of the assets they have, or if it's the net worth of the business. And if it's the net worth, then the debts on the other side, the loans on the listed as a liability are double counting. And so
Okay.
It's usually identifying what is personal assets versus what is business assets, what is personal debt versus what is business debt, and not separating them.
Okay, that's a really good point, because I mean when you are filling out an application, you are building a balance sheet, and I accidentally muted myself. So most small businesses don't always think of their business in terms of a balance sheet. And what Waldo's talking about is that if you're applying for an IDA or you're applying for a loan, or it's with a bank, you have to be able to break out all of this information into one place. So you're identifying the things that your business has, whether it's money in checking, if you're applying for a loan, probably not looking at a large balance in your checking account, but if you have other current assets, like we talked about furniture and equipment, those are all positives for your business. And then you're looking at what are some of the liabilities that your business holds. You could have credit card debt. You could have some payroll liabilities outstanding. You could have sales tax payable. This is where a shareholder is putting money into a business. So I'm, making payments on behalf of the business, and this is where the shareholder is expecting to be paid back. At the end of the day, when my net income, and I'm looking at this as of the very end of the year, I'm looking at to date, I have negative retained earnings, but I had a really great year in 2015, so I'm going to roll that net income that we saw on the profit and loss statement. It automatically rolls into the retained earnings. So if I look at this on January 16th, you no longer see any net income. You now see retained earnings. So this is, I think, a balance sheet. A lot of people don't think about balance sheets, especially if you're a sole proprietor. You're not being prompted to submit that information. But what Waldo's saying is that when you list your assets and then you list your total liabilities and equity, you want those two to be the same. So I've got $28,000 in assets, which is offset by $7,200 in liability. This amount right here, this $21,000 in my retained earnings, is kind of what you could think about as the net worth of your business, what you've built. And I would imagine for that kind of retained earnings, I probably wasn't taking a big paycheck and expensing my salary, but that's okay. I mean, however you want it to work, that's how it can work. So if I were to take capital draws, it would come out of the equity section. So balance sheets, I think, that's a really good tool for you to think about adding to your list of reports. So any other questions? I mean, there's a lot of topics we covered. We can drill down into something specific or an issue that you're having, or if you'd like to email Waldo or myself offline. I think I used to have, I can go ahead and add my, you can email me directly. We could set up a go-to-meeting session, and I can answer your questions that way if you're feeling a little shy to pipe up now. I mean, generalities, if you're seeing some issues occur, this version, it changes with every version of QuickBooks. I do like to work with a desktop version of QuickBooks. That's my preference with regard to being able to navigate. Other questions? I don't see anything coming in the box. We can go ahead and wrap up if you don't have anything else, and I just encourage you to, contact Waldo. There's Waldo's contact information, or you feel free to contact me with your questions. And we want to provide information that's meaningful to you in terms of what you're doing every day and questions you might be having, and for creating some really meaningful financial information for your business.
Thank you, Kim. I do apologize. We did have some microphone issues, and I was offline for a short period at the beginning. But we do have one question that, Donna says thank you. Thank you for the input, Donna. We will be posting this webinar to our YouTube channel, so people can go back and listen to it again and view the transactions again. Kim and I are also available if you have specific, you can give us a call. We're currently working on formulating our schedule for next year, starting July 1st, and we hope that we will be covering topics. If there are any topics that you would like to see covered, email them to me, and we'll see if we can fit a webinar in on those specifics. Thank you again for stopping or for joining us today. And again, at any time we offer counseling, either Jonathan or myself or Debbie are available, and please contact us if you need any assistance. Have a good day, everyone, and enjoy the rest of the summer. Thanks.